Boy, that time flies when you're having fun, doesn't it? But it's about that time of day again here. Time to get back to work. It's Wednesday evening. It's June the 2nd, 2021. My name is Joseph, and as always, welcome back to your nightly newsletter. Now, if you're watching for the first time tonight, it's great to have you with me because my job tonight is to help us find the best trade setups for tomorrow. That's Thursday's trading session. I got a great video in store for you guys tonight. Charts are all prepped in the background, as you can see. Got the E-mini, the Nasdaq's here, and we got the gold on our radar for tomorrow. The whole gang is together here tonight on this video. Got a bunch of great setups we're tracking for tomorrow. We get some big news tomorrow, right? Get some jobs news tomorrow morning. Get some inflation news tomorrow morning. So big news coming out tomorrow. And in case you weren't paying attention, lots of range-bound markets right now. Ranges are magnets. That means we're trading breakouts. We're trading failed breakouts. I'll tell you, lots of potential opportunities for Thursday's trading session. By the end of this video, you'll know my favorite trades to take, the best trades to avoid, and everything in between. You guys have a great plan of attack, whether you're trading on your own or you're with me tomorrow morning in our trade room. Before we jump into the video, though, and get these charts working here tonight, I just want to make sure to remind you, make sure you subscribe to our YouTube channel. We publish this video newsletter every evening, Monday through Thursday, with our best trade ideas for the following day. I don't want you to miss tomorrow night's video, so make sure you subscribe, hit the little bell icon so you always get notified every time I publish something new. And speaking of which, if you guys have any questions, you can always drop those questions in the comments section. I'd love to answer any questions that you have. And as always, I appreciate you guys tuning in every evening, carving out some time with me every evening on this video. If you like this video as much as I enjoy making it for you guys every evening, do me a big favor, hit that like button, that thumbs up here on this video. But make sure you subscribe, hit that bell icon, drop those questions if you got them, and thumbs up if you guys enjoyed the video here tonight. But enough of the intro. Time is ticking. Thursday is right around the corner. Got a bunch of news, got a bunch of ranges. Smells like opportunity as we go into Thursday's trading session. Charts are all ready, as you can see. We got ranges, right? Ranges. Now, the S&P and the Nasdaq are pretty similar. They are bear markets right now into trading ranges. There are some very important differences. For example, the Nasdaq is coming off the low of that range where the S&P is not. So there are some very key differences that will tell us kind of the best way to time our entries for tomorrow. But for the most part, though, we're bearish into ranges. I'm looking at levels of resistance up above those ranges and looking for ways to get short, right? I'm looking to short these pops. I would love to short the pops on the E-minis and also short the breakouts, right? Because as we talked about in last night's video, we've got some really nice pendulum swing targets, down around some of these big green rectangles down there. So I'm looking to sell the pops. I would love to short some bear breakouts going lower here. And of course, with some big news tomorrow, we'll talk about potential breakouts and reversals, and we'll make sure you're ready for that as well. Gold is probably the most interesting chart for tomorrow, and possibly the most exciting opportunity is on gold for tomorrow. We have, as you can see, two ranges right now on the gold. That means we have what's called a double distribution day, right? Well, I don't want to use too many complicated words here, but these double distribution, these multiple range environments, they mean big moves, right? They mean big volatile moves, big wide range moves. So I'll tell you, for tomorrow, I would love to short these pops and try to ride this thing all the way back down, and then potentially get the whole thing happening once again at the lows and buy it right back up again. Buying low, selling high. I really think there are some great opportunities to short those highs on the gold. And of course, gold, of course, as always, has been bullish a lot lately. I'll be talking about trading breakouts going higher as well, because we do have some big upside targets on the gold right now. But a double distribution day or days on gold definitely gets me excited. Looking forward to that chart here tonight on this video. Now, before we jump into the charts, though, let's just make sure we get on the same page here, because we do have big news coming here for tomorrow. Tomorrow, of course, is a Thursday trading session. It feels like a Wednesday tomorrow because, of course, Monday was the holiday. We have a peppering of news tomorrow morning. Now, you'll notice the big news tomorrow is the inflation number, right? At 10 o'clock, we've got PMI and ISM 9:45 and 10 o'clock Eastern time. That is most likely going to be the biggest catalyst in the market here tomorrow. Not that I don't think jobless claims are going to be on people's radar, but we're going to have to see a pretty big surprise out of jobless claims tomorrow morning to really get a good, a good market reaction from these markets. So, I would say jobless claims is probably, as you can see, it's the Red Star news tomorrow. I don't think you're going to see as much of an impact from the jobless claims unless unless it's incredibly high or incredibly low. I would put more bang on the buck, more catalyst, right, potential off that PMI number and that ISM services number. As I always tell my clients, if you could only be at your desk for an hour tomorrow, 9:45 to 10:45 is absolutely when you want to make sure you carve out some time to be trading with us tomorrow morning in the trade room. So PMI and ISM at 10 o'clock. Again, I'll be watching jobless claims. We open up our trade room at 8 o'clock every morning, so I'll definitely be watching jobless claims. But unless that's a big miss, I would imagine the most bang for the buck will be that 9:45 and 10 o'clock news report. Now, don't forget, tomorrow is also the day before that non-farm Friday, which means the afternoon is usually a relatively quiet one the day before non-farm payrolls. Remember, Friday morning is that big jobs report, and you're not going to have a lot of the big traders, right? The trading firms, the big asset firms, you're not going to see them playing around in the market on Thursday afternoon because they're not going to want to have to unwind those positions before the news comes out at 8:30. So just kind of keep it in mind for tomorrow, right? We're going to focus on kind of that, kind of the early 2/3 of the day, right? Leave that final third of the day, maybe 2:30, 3 o'clock, right, and later. Just be very careful as you go into the closing bell tomorrow, again, because you won't see a lot of the bigger players in the market tomorrow afternoon as they kind of batten down the hatches and tie things down ahead of the employment number, which in all reality, remember, the employment number is the big news of the week, and it really, for the most part, besides the inflation report tomorrow morning, it may be the root cause of why the markets were so sleepy in today's trading session. But I'll tell you, though, big news for inflation tomorrow. I wouldn't hold your breath on the jobless claims, but that 9:45 and 10 o'clock news is definitely on our radar. And again, don't forget, we'll be tomorrow morning, every morning in our trade room. I would love to have you there, right there with us. We'll be trading this stuff together. If you want to come out and join us and trade right along with us, I'll put the membership links you guys need in the description of this YouTube video, or I'll put a big button for you guys below me tonight on the trading blog here. So grab that button, grab that link, get registered, and look forward to seeing you tomorrow morning in the trade room as a member. How about some charts here now? So we got a pretty good idea of what's going on, the schedule for tomorrow, get inflation reports, right, 9:45 and 10 o'clock. Lots of ranges, right? Lots of ranges. S&P, Nasdaq, gold. Why don't we jump right in here tonight on the S&P 500? The key takeaway here on the E-mini S&P, the most important thing, it's a bear market into a trading range. Now, last night we talked about this being a bear market into a spike in channel, and we talked about how you want to focus on selling the base of that channel. So if you paid attention last night, you pretty much knew exactly where I was looking to short here for today. And if you kind of follow the plan that we lay out in the video classes, right, you probably did pretty well on that short off the high there. So you can definitely see that spike in channel was definitely in play from yesterday. But here's the problem. You'll notice, though, they never finish off that retest, right? They got that strong move down into that spike in channel yesterday. They got the pop up. They should have finished that retest of that low, right? We should have been able to get back down to retest the low. And that is one very big difference between the S&P and the Nasdaq. When we get to the S&P, or this is the S&P, when we get to the Nasdaq here in a second, you'll see kind of how that plays in. It's a little bit, that's the one key difference here between the Nasdaq and the S&P. The S&P did not complete its rotation, which definitely does suggest the buyers are a little bit stronger, but it's still not a bull market. It's very much a bear market right now into a trading range. Bearish into a range right now. Whenever I'm bearish like this into a trading range, ranges are magnets, right? So that's you want to always think of it that way. Ranges are magnets. And because we have a bearish kind of bias overall, our job is pretty simple. We want to find levels of resistance, right? Like rising support or rising trend lines overhead, right? Swing lines overhead, trend lines overhead, right? We want to find levels of resistance and basically sell those levels of resistance and use that range as the magnet. It's as simple as that, right? That's where the most money's made in bearish range-bound markets. Another way I would look to trade this is on a breakdown, right? So trading it as it runs lower. Now, we talked about last night that range from last week. Remember that big range from last week? Well, we measured the amount above the range, and we're now projecting that amount below the range. And so we have a pretty good idea of where the bears want to go if we do get that breakdown, right? That 4180 area has been on our radar here for quite some time. You'll notice a lot of lows down there, some big support levels down there. So we have to we definitely have a feeling they're going to be trying to run this thing down to those lows if we can get a breakout. So again, ranges are magnets. I want to sell high, and I can sell low on a breakout. I'd love to sell it as it goes up. I would love to sell it as it goes down. The one thing I got to worry about, obviously, is focusing on the right entry technique. So let's talk about that. The most important thing on selling high right now is going to be that failed rotation. It's a big deal. Whenever we have a range, we expect the market to rotate back and forth, right? We expect it to rotate back and forth. So real quickly, notice how the market rotates, right? Back and forth, it goes up, but it doesn't finish off the rotation. Now, again, like I mentioned earlier, that definitely means the sellers are either they're not strong, or the buyers are a lot stronger, right? It's probably the buyers in this situation right now. So as the market tries to run higher now, that lack of rotation is a really big clue. It tells me that there's more buyers than I think there probably are, right? And so what that tells me is, for me to want to sell this market now as we go higher, I'm going to want to respect those buyers, right? I'm going to want to respect their momentum. I'm going to want to respect their strength. And so when I get up into these highs up here, what I'll do is I'll simply wait for some exhaustion, right? I'll wait for the buyers to kind of tire themselves out. And to do that, I use a very simple pattern called a failure pattern. Now this one, what I'll do is I'll let the buyers try twice. Again, that lack of rotation, I want these buyers to try once, try twice. And once I can see them trying a couple times up there, now I know that they will have spent all their ammunition, and I know their stop losses are sitting right below that low now, right? That's where the pain is. That's where the buyers realize they're wrong, and that's exactly where I want to be selling as the market comes kind of collapsing back down in. Again, we call these failure setups in our trade room, right? Because what you're doing is you're waiting for the price to go up, you're waiting for the buyers to try, and you're selling into those failures. Now, keep in mind, these will oftentimes whip and really run in the other direction. And one of my favorite kind of follow-up trades on this is the market trend line off those lows, find a new channel off that high, and sell that first pullback off the high of that channel. Now, what I'll do is, to get into that trade, keep in mind, this is a 7,000 tick chart right here, upper left-hand corner, right? That's a 7,000 tick chart. What I'll do is, to actually get into that, right, that pullback, I'll look for trades that I call trap entries or failure entries or pullback entries on a faster time frame, right? So again, it'll be a failure setup into that kind of rolling over. And then again, I'm looking for bull trap entries, looking for buyer failure entries. I'm looking for pullback entries on a faster, like a 1,000 tick chart, right, tomorrow morning in our trade room. Now, I'm not going to go over all those smaller details about those entry techniques, right? The traps, the failures, the pullback setups. What I will do, though, is I'll include all of those details in our free trading course. So what I'll do is I'll put a little pop-up there in the upper right-hand corner for you. If you haven't done so already, grab that free course course, because as part of the free course, you'll learn all the entry triggers, right, which is what we use to actually get into the trades. On top of that, you'll learn the entire 3-step strategy, how to trade trends, how to trade ranges, how to trade transitions between trends and ranges, and you'll learn, of course, right, lots of the smaller details that I can't cover in this video. So grab that link that popped up there. You'll definitely love that free trading course. So that covers how to sell short off that high. And honestly, guys, even if we do make that run all the way back up, I would still be open-minded to sell that one right back down. We'll talk about that here in a second. So the next thing is running lower. So running lower is definitely easier, but it's not as simple as just selling it as it goes lower, because the range is a magnet. So as the market runs lower, there are 2 breakout patterns I always like to look for. In this particular situation, you could probably use what's called the Try Breakout, knowing that the range is a magnet, but knowing that if we can get enough strength down here, they're going to want to take out that pendulum at 41.80. The Try Breakout. First thing is, I want to see a strong move down, right? Take out those lows. The next thing is, I want to see a shallow pullback to the moving average. Then I want to see a lower low in price. Once I get that strong move down, right, take out those lows, the bears hold it off the moving average with a lower low in price. Now I start looking for a trap above that high. Now, this is, of course, just me drawing the screen right now. It doesn't need to be right there, right? It could be further down. Strong move down, shallow pullback, lower low in price, right? Trap high. So it can easily be higher, it could be lower, but that's the general idea of what I'm looking for if this thing really starts to take off to the downside. And again, we get a pretty good idea of where the market wants to go. Another thing you want to consider for tomorrow would be a 1-2-3 breakout, which would be a not so strong move down, a pullback to the moving average, then a very strong jump off the moving average. These are very common, right? Once you get that 1-2-3 go, now we've broken free of the rectangle, right? The range, and now we can mark up that low, we can mark up that high, and we can now look for that short. I always tell my clients, you want the first pullback, right? The first test of that channel. That's the one that you want. You don't want to go trying to take the second, third, fourth, hit that first one. And again, right, I'm not going to blindly just sell on the top of that channel. I'll be looking at a faster time frame, 800 tick chart, 1,000 tick chart for a bull trap entry, right? A buyer failure entry, a pullback combination. We see a lot of times where it'll go up into that high. The buyers will confuse it as a reversal. They'll try to buy it. We can go that failure into pullback combination right off of that high. So imagine the top of that channel. We zoom in there, those failure into pullback combinations. Again, you'll learn all about those in that free trading course that I mentioned before. So those are 2 breakout patterns, right, as we're going lower. Again, you want to stay out of the middle, right? You don't want to trade the middle of that trading range. How do I buy this market right now? Well, first of all, it's going to be difficult to buy this as the market rolls lower because, again, we are so bearish, right? We're just not bullish. The only way I would feel comfortable buying it as it goes lower would be if it ran lower, had trouble going lower, double bottomed, and then we have to use that nested failure, right? The 1, the 2, and then back up from there. It's going to take a while to convince us to feel comfortable buying that low because it is so bearish here. But again, imagine, right? They take out that low, they double bottom or something close to a double bottom. It doesn't need to be exactly double bottom, but you do want to see it take out that low again. And then bears try twice. Once we have that, then we know exactly where stops are and we can buy into those stops. This is a very advanced entry because it will be totally against the trend, right? So just be aware of that. You're going to want to see it take out the low, double bottom, and then get the entry trigger. And again, I'm going to go over more of the entry triggers for you guys inside of that free trading course. Going higher is definitely where we have some opportunity, but be aware though, it's not that window may close very quickly here, right? So we've got our highs overhead. They are not the all-time highs. right? But we've got a big top up there, as you can see. So as we try to go higher here, what's my concern? Well, if the market rips higher here, we've got some good momentum. We're already seeing that failed rotation. So we already kind of have a glimpse of that already coming right now. The problem we're going to have, though, is location. It's not going to be a very easy place to get long. In fact, as I mentioned earlier, I think the easier money is to wait for it to take out those highs and then look for those crown reversal patterns and sell short off of that high, right? I mean, that honestly would probably be the easier money to make here for tomorrow, right? As we go up, we take out those highs. We're very bullish at that point, but again, we're right into resistance. Let those buyers try once. Let them try twice, right? Get that exhaustion going and then hit them right where it hurts, right? Sell right into those stop losses. I always like to sell off the top of that channel, right? But that would be a beautiful, kind of crown reversal or nested failure setup off the high of that, again, off the high of that range. The range below us is a magnet. And then again, don't forget, right? You can always go failure and then hit that first pullback. That first pullback will be beautiful to grab it as we collapse back down into that trading range. So, again, I think the easier money up there will be the sell side just because of the range below us. If I did want to be a buyer on this, though, I would have to be looking for traps. So first of all, we'd have to see a breakout. We'd have to see that strong move up, that pull back to the moving average, and then go higher here, right? Remember, we haven't seen that yet. We've seen a lot of strong moves, but they haven't been able to hold. They have to hold that pullback in order for me to trust that breakout. If they don't, we'll go right back into just give me a chance to sell short, right? And we'll sell it back down again. So again, they've got to hold that pullback here on the E-mini and make that run. But be aware, though, as they're going higher here, and I mark up that new channel, I mark up that low, you're going to really want to be looking for those traps, right, off of that low. The reality is this. If you have enough momentum, if I get enough momentum for that 1, 2, 3 breakout, if I have enough momentum, the odds are very good we're going to get a good target off of that low, right? Maybe I can grab the low or the high of that triangle up there too. Again, if we have enough momentum, you'll get some money out of that pullback off the low. It may not go forever, right? It may not go much further than the highs up there, and then we look for that 1, 2 and sell it back down in, right? But again, we're going to have to get some good momentum up here, right? And then get that trap entry, because trap entries are the entries you want to avoid buying really high, right? And that's the big problem as we go up there, right? And again, don't forget, I'll talk about traps, failures, everything in between as part of that free trading course. Now, if we keep going, right, then all of a sudden that all-time high there is definitely in striking distance. And we'll talk more about that tomorrow morning in the trade room once we kind of get that breakout going higher here. And again, tomorrow morning, 8 o'clock Eastern time, right? We'll trade this stuff together. So now you guys have a pretty good idea kind of for how I'll be looking to trade the S&P here for tomorrow. Next up here, how about the Nasdaq? So Nasdaq is, again, very similar to the S&P in the sense that it's a bear range, right? It's a bear market into a trading range. So we definitely have that similarity, but you'll notice there's one big difference here on the Nasdaq, and that is the Nasdaq has successfully completed its rotation. So everything appears all peachy keen right now, right? It all appears to be doing great. Rotates back and forth here, which means I'm looking for that short, right? I want that short off those highs here. So it's going to be relatively similar to the plan on the S&P. The Nasdaq is very similar. I think the Nasdaq is almost an easier market because you'll notice here we've got this range. This is the same range pretty much from yesterday. I've got the amount we went below the range, the amount we go above the range. That creates resistance. I've got a trend line resistance. I've got swing lines resistance. I mean, there's a lot of great areas to love to short up here. The only challenge we're going to have on this is the fact that it's you've got this rotation off the low. So we had failed rotation on the S&P. This one, you'll notice by the time we get up around these highs, this is going to feel like a very bull market. Now look what happened back here. Right? Look right here. Right? See what happened here? We had that strong run up, right? And notice where we started from. We began the move higher from the low of that range, actually below the low of that trading range, right? We call this rotation off the low, right? Basically, what happens is momentum starts to build, and as it goes higher here, you don't want to just simply sell into that stuff, right? Give the buyers 2 tries, 1 and 2. They'll try twice most of the time when they come off the low of that range. Right? Now, they're not always going to do that. Sometimes they won't, right? Sometimes, I always tell my clients, right, there's a big difference between these 2 pullbacks, right? Bear market into a range, go up, sell it back down with a failure pattern. Bear market into a range, we go down and then back up. And that's a big difference, right? It's the same spot, right? It's the same spot, but it's a very different momentum, right? We're coming off the low of that trading range. In that situation, give those buyers the benefit of the doubt, let them try twice, and then sell. Because oftentimes what will happen is you'll get in short a little bit too early. The buyers will come in and say, gotcha, right? They'll run you out, stop you out, and then they'll make that run back down. That's all because of momentum, right? It's the reason why those failure patterns, the reason why they work on the left example is because there's no momentum for the bulls. All right, on the right example, there's a lot of momentum for the bulls. So very, very important. Again, very small detail there, but as you probably have learned already, the small details mean big wins or big losses in the futures markets. So we kind of have the idea here, same thing. I want to sell at resistance up above the high of that range. My concern is rotation off the low, right? That's my big concern. The range is the magnet. The bears definitely have all of the momentum, right? The bulls have not been able to get anything going here so far. So unless something changes, all things equal, when I get up inside these highs up here, the higher the better, really. I would love to see them take this pendulum swing out. Like that would be probably my favorite trade tomorrow would be take out that pendulum swing, right? Because that pendulum swing would complete this move going higher. Take the pendulum swing now, give those buyers a chance. Let's go this way a little bit, right? Give those buyers a chance to kind of dig their own grave, if you will, right? Let them exhaust, right? Let them try once, let them try twice. Again, just as we saw back here, right? Let them try a couple times, once, twice, then hit them right where it hurts, right? Sell right into those stop losses. Once those buyers try a couple times, the aggressive rookies are in, the patient veterans are in. Now we know exactly where those stops are, and we can now short into those stop losses. And again, one of my favorite kind of follow-ups on this is that once we get that stop run and the market collapses, mark up that low, find that new channel, and hit it again, right? Hit it again. So you can definitely grab that follow-up. It's a failure, right? Failure into kind of pullback combination. And again, the failure is pretty easy. The failure is pretty obvious. What you want to then do is drill down on a faster time frame and look for these specific entry triggers we talk about in the free course for that sell off the high of that channel. Again, you can find that free course link in the upper right-hand corner or in the description of this YouTube video. So as we go higher, I would love to sell off that high. Now, things really get exciting if this market rolls over, right? If it rolls over. Now think about it, right? If we do not complete that move higher, if the market was to roll over, what would that tell you? What would that tell you? Remember, rotation. Rotation's a really big part of ranges, right? It's a big part of everything, really. Ranges, channels, everything. Right now, the market is rotating pretty well, back and forth, right? Back and forth here. What happens if we don't finish off that rotation and the market rolls lower? Yes, very bearish, right? Very, very bearish. You have to assume now the bulls have whatever reason, they're giving up, whatever it is, right? So we have a good idea that if the market was to roll over, I could now start to get pretty aggressive, right, on my entries. So think of it this way, very similar to the S&P, but I can definitely be a little more aggressive on this, right? As we go lower to try trap, that would probably be the best possible scenario as the market rolls over, right? You get that nice strong push down, that shallow pullback, that lower low in price, that trap high, right? Failed rotation. You know where those bears want to go, right? They want to run this thing. Well, we talked about this last night, right? We've got that big level down there at 13,570. If this thing fails rotation, I would imagine that 13,570 will be on everyone's radar here for tomorrow. So again, if we don't get rotation, if the market rolls over, right, just simply rolls over here, look for that 1, 2 try trap. It's a very distinct entry setup we use in our trade room, right? Again, it's a strong move down, shallow pullback, right? That lower low in price and that trap high. And then as always, right, when the market's trending like that, I'm always looking for channels off those 2 lows, up off that high. Not required, right? Definitely not required, but certainly not a bad thing at all, right? So a trap entry off of the high of that channel, or, again, figure the channel and just grab that trap. That's a great one too. Now, if we go lower with a 1, 2, 3 breakout, right? 1, 2, 3 breakout pattern, right? We roll over, the bears hold that pullback, they run the market lower here. That's a pretty simple plan, right? Mark that low, mark that high, and we want the first test, right? The first test. Now, I don't really care, honestly. I don't really care where I am for that first test. Again, as I said earlier, if we have enough momentum, right, that failed rotation, that 1, 2 go off the moving average, if we have enough momentum, you're going to most likely get at least another leg off the low of that channel. Again, it may not go forever, but it will at the very least, though, take out that low, give you a quick profit target, let you get rid of the risk, and see how far the trade will go, right? That's what I try to do in these situations, right? Those are 2 breakouts as we go lower. Very simple breakout patterns, right? 2 try breakouts and 1, 2, 3 breakouts. You'll see a lot of examples of those. I have hundreds of examples of breakouts as part of that free course linked up in the upper right-hand corner. All right, we're looking good. So now we know the basics here of how to trade this Nasdaq for tomorrow. Some of the more advanced tactics, right? How do we buy this thing? It's going to be difficult to get long. It definitely is. The biggest problem we have in the Nasdaq right now is look left. I mean, look at all of these tops up here. So the only way that I can really get long up here would be if we see a lot of strength, right? Remember, if we have enough strength, I don't care where we are. If we have enough momentum and a good entry set up, if it looks like a duck and sounds like a duck, it's going to probably act like a duck too, right? If we have enough momentum and a good entry set up, you're going to probably get at least your first target on it, and then who knows how far it'll go from there. So as we go higher here, let's say, for example, right, we make that run up, we take out those highs, we hold that pullback, and we go. If this leg higher, right, if that leg higher is strong enough, I will definitely be looking for that first pullback off the low of that channel. And the specific entry technique I'll be looking for are traps, right? Trap entries. So what'll happen is you'll see there'll be this little swing back there, right? Little trap entry there below that low. Again, I'm not going to go into all those small details here tonight, but just remember this, right? If you have enough momentum, right, on that push going higher, you can almost guarantee that pullback will get bought. Again, it may not keep going forever, right? But it will at least give you a chance to make a quick profit, get that stop the point of entry, right? Remove the risk, and then see how far it will go from there. Okay? Again, focus on trap entries, right? Trap entries. Again, this is a 4,000 tick chart. I'll drill down to like 800 tick chart, right? On the Nasdaq, I wouldn't recommend going anything faster than like a 618 for the entry time frame on the Nasdaq. But that's how I would trade it as it goes higher. Again, I would love to short this thing though, right? Like I said in the S&P, I would much rather, as we go higher here, again, knowing we have all of that resistance up overhead, if we have enough, again, if we can get exhaustion up here, right? Get these buyers to try a couple times, right? Let them try once. Let them try twice. Or, right, let's say this. Let's say make the run higher, right? They get that, let's say we get that 1, 2, 3 breakout. They get that run higher, right? This could easily be the case here. We buy that pullback off the low, right? It then takes the highs out, doesn't keep going much further, but then comes over and goes, all right, 1, 2, bam, right back down in. That is easy to see, could easily be a possibility for tomorrow, right? We're getting that 1, 2, 3 break. We're not chasing the market higher. We're buying that first pullback. Very, very reliable entry. You can try to waste your time and chase markets all you want. The problem is you live by the sword, you die by the sword, right? If you make money chasing markets, you're going to lose money chasing markets. That's the tough part with trading. You can do everything wrong and still make money, and you don't really realize that until later on down the line, right? You reinforce bad habits. I don't chase the market, right? You don't want to chase it going higher because you never know when the bottom will fall out. Again, you make money chasing, you're going to lose the money chasing. It's just the way it goes, right? So what's going to happen is you're going to buy that first pullback, right? Again, maybe it keeps going forever, right? Maybe not. Maybe it double tops or barely makes a new high, then buyers once, buyers twice, and then we roll over, right? So we go up, we double top on it, whatever it is, right? We come back to the moving average now. The buyers are trying, right? They're trying once, they're trying twice. I always like to grab that trend line off that low, mark a channel off the high. There's two spots now. I can sell the trend line, I can sell the stop losses. Right? Those two spots are my favorite places to sell on these kind of big exhaustion reversals off the high, right? Then what I'll do is I'll look for that, again, new channel, right? Mark that low, mark that high, and you want that first pullback, right? You want that first pullback. These have potential to be really, really good trades for tomorrow. So again, we won't chase it as we go higher. I'll wait and see if we can get the reversal off the high, right? That hidden channel pullback off the high, and then back into that range here below us. Again, so those are some ideas for tomorrow on the Nasdaq. Again, the hard part of the Nasdaq is there's no shortage of resistance overhead, right? There's no shortage. You got all these tops over here, right? You got big highs over here. There's definitely no shortage there of tops up there, and then we get some wide open space above us before the all-time high. So would love to short those tops if we can get some exhaustion patterns off of that high. And as far as buying off the low, it's the same basic idea, right? If we roll over and go lower here right now, that failed rotation combined with the already bearish nature of this market means it's very, very dangerous to buy off this low. What you'd want to see is you'd want to see them make that strong run lower, right? And again, with someone like me, I'll sell that, right? I will sell that bounce just because that failed rotation, I can be aggressive on that. Once we get that bounce though, and they take out that low again, then we'll start looking for the bears exhausting and back up into it. We'll do that tomorrow, obviously, in the trade room once we kind of see more of the dynamics of how the markets are looking at that time. But that's kind of the idea of how you would buy off that low. Be very careful buying off that low because that failed rotation is a big, big clue. All right, let's keep this going here. Nasdaq is looking good. On to the big one here tonight, the gold market here, the yellow metal. We got what I was flexing my vocabulary earlier, right? With the double distribution. It's almost like a triple distribution here right now. Looking at gold right now. Gold is a very interesting market right now. Technically, it is bullish. You can see here in the short term. Fundamentally, it is relatively bullish, right? Because of all the stimulus going on, right? Dollar down, gold up. So we definitely have a lot of bulls in this market right now. That is for sure. If not just to be a bull because of the stimulus being injected into the market right now. The big key right now, the big takeaway right now in the gold is there are two ranges here, right? There's the range from last week into the holiday, into the new week, and there's the range down here. Now, if you were a market profile theorist, right, market profile trader, you would say, okay, there's a big volume spike right there. There's a big volume spike right there, right? That is what's called that's why they call it a double distribution day. What you want to focus on in these types of environments is selling the high and buying the low, and literally trading that move between the two. Right? Because what's going to happen is the market will rotate. It'll go up, try to find buyers, fail back down in. It'll then usually move very quickly through that kind of center middle where there's not a lot of volume. And then, of course, other side, right, we'll try to grab it on the other side and back in. Right? So that's what you want to think about with a double distribution day, or a situation where I'm saying double distribution, but all it is just two ranges. Whenever you see two ranges like this, you know there's a big vacuum right between the two, and you know you want to sell high and buy low, and ultimately trade the turn. Like my favorite way to trade tomorrow would be go up, trade the exhaustion, and then trade the turn coming back down in. Very similar when you think about it to the plan on the S&P and the Nasdaq, right? We know that, for all intents and purposes, this area right here, that's your magnet. right? That's your magnet. That's kind of the balanced area on this market. We want to go up, fade it back down. And because that kind of, again, because there's two ranges, this middle part means it can quickly pick up speed. These are really great markets. These are great conditions to trade in. So that's how I would like to do it. I'd like to fade the edges and trade the turns, right? Fade the edges and trade the turns. So in other words, I've got some levels of resistance above me. I got 1, 2, 3 legs higher. That gives me that measured move, just so you kind of know, right, where I'm getting on that. So I'd like to go up, if at all possible. And what you want to remember is you don't want to be buying up here unless we can see a breakout, which we've talked about a couple of breakout patterns already here. What you want to focus on up here is waiting for exhaustion, right? Wait for those buyers to exhaust themselves. Let those buyers try a couple times, right? Once, twice. Again, draw that trend line off that low, up around that high, right? Hit that trend line. Grab that trap above that high, right? There's a bunch of different ways you can short this setup, right? Again, they're called failure patterns, right? They're nested variations. It's basically a failure inside of that pullback. So we want to short that top, and then again, I would love to trade the turn, right? Trade that turn, mark up that, right? Mark up that low, mark up that high, and short that pop with, again, a trap entry, right? A failure entry. This is a 1500 tick chart. On the gold, I'll typically go down to like a 377 tick, right? On a faster time frame and grab that entry, right? So we'll look for it. We'll look for the setup on the 1500, and then you'll see me drill down right on that 377. So the reality is we just want to buy it up there, right? So sell it as we go up. Buyers try a couple times. Stops are above those lows. Sell into those stop losses, mark up that low, mark up that high. Don't chase it, right? But definitely get in on that first pullback off the high. Failure into pullback combination. I'm looking for bull traps, buyer failures, right? Pullback combinations off the high. And again, we'll talk about those in the free trading class. As we go, right, if we go lower here. Now, if we go lower, this becomes a big deal, because if we go lower, that basically means this range from yesterday is actually not the range in play. If we don't go higher and we end up going lower, that basically confirms for us this range at 1900, 1902, that's the one that you want to pay attention to. And if that is the case, then what we can do is anticipate a pendulum swing. And the pendulum swing can really be good on this, because you'll notice if I mark up the amount above that range and put it down below, that becomes your big milestone for tomorrow. So if we do not end up making that move higher here, a lot like the Nasdaq, right? If it rolls over, something is wrong, right? Something has changed. We should be trying to rotate to these highs and going back down again. If we do get the market to roll over again, that's exactly what you're still looking for, those trap entries, those reversal entries, right? So a couple things we'll look for here is as we go higher, do we get buyers trying once? Do we get buyers trying twice? That'd be a nice reversal, right, off the high. If you're trading the overnight, right, the pre-market overnight, right, that will be a short. That's definitely worth taking here for tomorrow. Or maybe we see a 1, strong move down, 2, a pullback to the moving average, and 3, jump off the EMA, mark that low, mark that high. Absolutely would love to short the first pullback off that high, right? I'm not going to short the first one. We're not quite there yet. We're bullish right now, right? So you wouldn't want to short that first one, but the second one is definitely where, again, drill down to a faster time frame, grab your bull trap entry, your buyer failure entry, and short off of that top. Or let's say the bottom drops out of it and the market simply collapses. If it collapses and runs lower here, strong move down, shallow pullback, lower low in price, traps, baby, right? Traps, those are always the ones I want if we get that 2-try trap set up. Right? Remember, don't forget to mark up that low, mark up that high. Definitely doesn't hurt to the high of that channel, right? So gold is, again, rotating off those highs or rotating back and forth. I would love to sell that nested failure. I would love to sell the reversal off the highs, right? I would love to sell the breakdown. How do we buy this market right now? That's kind of the hard part, right? How do we buy this market? Well, we get some inflation reports tomorrow. There is a pendulum swing up there, which would make sense. So if we do see a breakout, and by the way, what does a breakout look like? Breakout would be a strong move higher, a pullback to the moving average, and a break and hold, right? Remember, you want to see, it's not so much the strength of the first leg, it's the strength of that second leg, the jump off the moving average. If we get that jump, like back here, right? Look at this right here, right? So we go up, big strong push up. Why aren't the buyers jumping off that pullback? I know why, because that range down there. They're not as strong as they think they are, right? It doesn't matter how strong the move higher is. All that matters is, can they hold the pullback? Can they hold the pullback? Right now, we haven't seen that yet. We haven't seen enough evidence yet these buyers can actually hold this move going higher. For all I know, this thing will keep going higher and come right back down in. Hopefully it does, right? We'll get that short. So if they do take it higher and they hold that pullback and they blast now, right? They really jump off the moving average. Now that tells you know where they're trying to go. They're trying to take out that pendulum swing and possibly even more. At that point now, remember, you don't want to chase it, right? You live by the sword, you die by the sword. Mark up that high. Mark up that low. And again, I'm not just blindly buying it, right? I'm looking for those bear traps, right? Those failure patterns. We oftentimes see stuff like this on those faster time frames. Again, like a 377 tick chart. We oftentimes see, right, a trap entry into a failure, into a pullback combination. Right? Lots of chances to buy that, right? Trap entry, failure entry, pullback entry, all coming off the low of that channel, again, on a faster time frame, right? You'll learn more about that stuff in the free course, right? I keep mentioning in the upper right-hand corner. And also, too, keep in mind, right? We may see this thing run up, pull back, go. We could easily get, right, that buy. They take out that high, and then watch out, exhaustion, 1, 2, and right back down again, right? So don't be afraid to fade those edges. Again, it's a double distribution day, right? There's a big magnet right back in the middle, right? If we get enough strength, if we can see enough strength with a 1, 2, 3 breakout, I will definitely buy that first pullback. Again, it doesn't matter where you are. If you have enough momentum and a good entry set up, take the darn trade. It's worth the risk of the loss. It'll still be a very high percentage trade overall. Nothing is perfect, but it's worth the risk if you have enough momentum. The buy side here on the way lower here, that will be another one of those situations where you've really got to be careful, right? If we end up all the way down at those lows, that is one of the worst times to get long because you have all of this momentum, right? All of that rotation. The buyers are running for cover at that point. But, right, if we get down to those lows, again, guys like me will sell that pop because of all the momentum. If they double bottom off that low, right, and then we see the bears, right? The bears struggle. They try once, they try twice. Yes, right? Those are scenarios where I can start to take, right, some counter trend reversals off of those lows. But I'm definitely not trying to pick the bottom of it, right? And I'm waiting for it to bounce, take out that low. Do we keep going? Oh, no, we don't? Okay, now look for the bears to exhaust, and now look for that rotation back up in. Because again, it's a range, right? So there's going to be that magnet right in the middle. I want to sell the high, I want to buy the low, and again, if it rolls over, I really got to be careful with that momentum coming off of that low. A double distribution situation, always one of my favorites because you can fade the edges, right? Trade the edges and ride the rotation. Hopefully you guys now can see why I'm excited for tomorrow, Thursday's trading session. Got big news. We got some big potential setups, and hopefully I'll see you there right there with us tomorrow morning in our trade room. What I'll do is I'll put all the membership information you guys need once again in the description of this YouTube video. If you're on the blog right now at Sideways Markets, I'll put a big button for you below me tonight on the trading blog. So grab that link, grab that button, get registered. And if you want more information about different payment plan options or anything else we talk about right in our videos, definitely don't be afraid to call the office. I'm always here. I would love to help. I've got the phone number there, live chat on the left, live chat on the right. You can always drop questions in the comment section too if you guys need help along the way. But that's it for me though. hopefully I'll see you guys tomorrow morning at the opening bell. If not, we'll come back and we'll do it again tomorrow night, right? Tomorrow night's Thursday night. We'll get things prepped up for non-farm Friday. So again, tomorrow morning, 8 o'clock in the trade. If not, we'll see you guys tomorrow night in our next edition of our nightly newsletter. As always, guys, my name is Joseph. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.